The stock market has never been higher. It ended on Tuesday at a record level of just about 22,000, and it was at 18,000 and change on election day, which was only 9 months ago. That's a pretty nice bump. President Trump is taking credit for a lot of this, and almost any president would do that. But is our president really fueling this rally? More important, if he continues to run into political roadblocks, will the market hit a wall? Stocks did surge after Trump's win in November because investors were hoping that Trump and the Republican-controlled Congress would enact pro-business policies like cut regulations, simplify the tax system, and invest in a big infrastructure program. And certain areas in the market did really well because of these expectations, but lately many of those early expectations are falling way short. He hasn't repealed the Affordable Health Care Act, and that's raising doubts about his ability to pass a new tax code plan and also his ability to put in place his infrastructure plan. So things are a little topsy-turvy, and the small cap Russell 2000 has had less than half of the gain of the S&P 500. Raw material producers, which were supposed to really benefit from the big infrastructure program, aren't really doing that well anymore. They had done better before. So also housing and auto sales are slowing. We've got political gridlock, a potential default on debt from Venezuela, and military escalation woes with North Korea and possibly Iran. But on the good side, wages are going up and unemployment is almost non-existent. So we always have a mixed bag, and that's what we have now. But if President Trump isn't able to move his agenda forward, is the market doomed? That's the question. Well, personally, I don't think so, because of profits. U.S. companies are super profitable right now, and big increases in profits lead to higher stock prices. Some of the most profitable companies right now are those that do business all over the world. What's interesting is that global companies were really worried after President Trump got elected because he was very focused on America first, and they were afraid of making it difficult for global companies. And now there are a lot of tech stocks included in the S&P, and most of them get more than half of their sales from overseas, and they should do well as Europe and the developing world get stronger. Also, think back to the campaign when the candidate Trump talked about sanctioning China and Mexico. That sent the markets into hysteria. But you don't really hear much about those sanctions and tariffs anymore. At least I don't. So the fear of draconian trade tariffs being put in place is much lower today than it was then, and that's why China, Mexico, and emerging markets as a whole have done really well. And that was the last thing investors expected, but there you go. It's just another example of the need to pay attention to the market rather than try to predict it. Now, are we overdue for a correction? Probably. As I've said before, on average, the market corrects 14.2% per year. But preemptively running to the sidelines is usually very expensive. The most successful strategy I know of is to have the right mix of stocks and bonds, equity and fixed income. And the right mix should allow you to reach your long-term financial goals over the long run without giving you a nervous breakdown in the short run. That's why it's important for you and me to connect on a regular basis. And by the way, that's why our most recent rebalance was so important. We made some big changes that brought in much more diversification into your portfolios. And over the long run, the goal is to boost performance while reducing risk. I feel very confident and optimistic, but I can't guarantee results. But I'm happy with the progress so far. Again, it's a very short time period, so we'll have to continue to monitor it. Bottom line, President Trump's election did boost the market in the beginning, but what's moving the market right now is profits, corporate profitability, and that's what's going to be important to stay focused on. That's what I'm doing. If you have questions, please call the office and Kim will set up a time for you and me to speak. She can be reached at 818-889-6700 extension 3. As always, I look forward to connecting with you. Thanks.